Well, hello and welcome to Moneycontrol. You have tuned into IPO Watch, and I'm your host, Nickey Mirchandani. Today, we're going to be talking about Kerala headquarters ESAF Small Finance Bank, which is trapping the primary markets. The IPO opens for subscription on November 3rd and will close on November 7th. It is a small finance bank which intends to raise around 463 crore from the maiden public issue. Out of that, 390 crore will be fresh issuance, and the remainder will be offer for sale. But to know more about the bank's strategy, financial, and the road ahead, we're being joined by Mr. Kadambelil Paul Thomas, the Managing Director and the CEO, and Gireesh C.P. is the CFO for the bank. Well, afternoon there, and thank you so much for taking out the time and joining us here. I'm going to start off by asking you the basic detail. The bank's AUM growth is almost at 40%, which seems to be highest as compared to all the other peers put together. What explains this? How sustainable is this?
See, we launched the bank in 2017. Before that, we were operating as a microfinance company. And as a microfinance institution, we have been there for the last 25 years. So there were, as an MFI, there were a lot of dependency on borrowed funds. So when we launched the bank, a window was so open to mobilize liability from the public. That helped us to grow the asset book. And that network was already been created. And when we started from a small base, that's why the growth percentage was on a higher side.
Clearly, the base effect here, but you also seem to have reduced your MFI exposure in the AUM overall from 93% to 75% from FY21 to 23. What explains this? Will that have a bearing on your yields, and what's the strategy ahead?
See, as a bank, we need to diversify our asset book. So, as a strategy, we have identified other potential asset classes, and we've started gold loan. So today, gold loan consists of 13%. Then we also started mortgage, mobility, and MSME and agri. So all these new verticals have started, and that's started growing. So percentage-wise, the MFI book has come down, but effectively the absolute value it has not come down; it has only increased.
Even reducing the microbanking exposure from 93 to 75%, the NIMs are not affected, and we are strategizing in that manner only.
Okay, so you intend to further diversify, because it seems like a change of strategy or a mix that is coming also. Your gold loan portfolio also has increased from 9% to 14% from FY21 to 23. So what's the strategy going ahead, which is the segment that you intend to diversify into further and perhaps lay more focus on?
Yeah, so we have this same strategy will be continuing. So I cannot specifically give a futuristic statement, but as a strategy, we wanted to diversify our asset class, and all the other assets are also yielding on a average of 14 to 18% yield. Also, we are expecting even in the other asset classes also.
So do you intend to further come down on your MFI exposure in that case?
Yeah, in a year-on-year basis, if you take every year, we are reducing the MFI concentration to 4 to 5%. So that is happening for the last couple of years.
And you intend to continue with the strategy, right? So 4 to 5% more of downtick one can expect going forward also, because you said you're going to be continuing with the strategy.
Yeah, as of now, we are intending to continue the same strategy.
So that will have some bearing on your NIMs, right? Because there will be some amount of downtick that will come on yields. How do you intend to compensate that?
See, the strategy going forward is to diversify our business more into a collateralized kind of lending, and at the same time, the NIMs are not affected because our segment which is intended to grow is the gold loan. Apart from gold loan, it is high yielding segments like used car financing, affordable housing, MSME, Agri, and all like that. So at the one side, we will get more secured lending. At the same time, we will not compromise much on the yield side. So that is the way in which we will manage the NIMs at around the present level, which is around 10%.
Fair point. 66% of advances are in two states, which is Kerala and Tamil Nadu. No big presence per se in the states which have highest microloan exposure like UP, Bihar, West Bengal. What's the strategy there? How are you going to be diversifying here? Do you intend to even diversify geographically?
See, as a geographical diversification strategy, we have started expanding to different states in 2004 itself. So we have opened branches in Maharashtra in 2004, Chhattisgarh, MP. So today we have 72 branches in Maharashtra, 68 in Madhya Pradesh, 30 in Chhattisgarh, and also last 3 years we have started or expanding to Rajasthan, Uttar Pradesh, these states. So we have made a presence. We have currently have presence in 23 states, 21 states, and 2 union territories. So geographical diversification is happening. But since we have started from Kerala and Tamil Nadu, the southern concentration, the higher percentages as of now comes from these two states. But over a period of time, it is the expansion is happening. We have set up a new zonal office in Delhi. We've divided our branch network into two, for the South, network 1 and network 2 for the rest of India. So we have dedicated people there to oversee these businesses. So it is happening.
So say for example, in the coming 5 years, where do you see more mix coming in from which states essentially? Right now, it seems it is the two of the states, Kerala and Tamil Nadu. Do you intend to have that focus intact, or do you think, like you're speaking about diversification, that mix will change?
Going forward, definitely the share of Kerala and Tamil Nadu, or particularly the south portion, will come down, and maybe a 50-50 of Kerala, Tamil Nadu, and rest of India can happen.
Fair point. Point well taken. Let's also talk about your doubling of profits, right? From FY21 to 23, there has been a NIM expansion also that you've given. 9 to 11% essentially is what the bank has delivered thus far from FY21 to 23. You said it's 10% sustainable from here on, right?
Yeah. In fact, it is not a short-time story. Even before COVID, in FY20, which was a normalized year of our operations, we had a net profit of 190 crores. So during the COVID period, because of the asset slippages and things like that, and associated interest reversal, etc., the profitability was affected. Otherwise, FY23, after addressing the spike in NPA problem, it has come back to a normalcy, to the stage which we have shown our results in FY20.
All right. Let's also understand ESAF relationship with the promoter company, who is also the banking correspondent. There is a bit of concern around the holding company structure continuing and the bank planning to add more businesses at the holding company level, which doesn't seem like an ideal situation, as it will bring down the promoter holding as per the RBI norm and also make the capital allocation a bit uncertain. Could you clarify more on this perspective?
Okay. So at the promoter group, we have a ESAF financial holding, which is a NBFC CIC, which has got 3 major shareholders. One is a cooperative. This cooperative was started in functioning in 2011, which is a multi-state cooperative credit society. Then when we launched the bank, there was a condition that in the promoter group, only one entity should do the business, the financial service activities. So the bank took over the financial service activity from the cooperative, and the cooperative converted to an agri cooperative. And even before we launched the bank, this cooperative was acting as a BC of the microfinance company. So when we started the business itself, we have adopted a BC as a strategy, business correspondent as a strategy to reach out to the last mile. So we appointed them as our BC. Since they are the first BC, then afterwards we have appointed another 21 institutional business correspondents. So their portion of their business is also coming down. So it is done as all the procedure for a related party transaction is being taken care of in this transaction. And the overall promoter holding in the bank is as of now it is 74%. Most probably after through the listing another 10% will come down, and we have time till 2032 to bring down the promoter holding to 26%, and during that period we will be able to bring down that, achieve that timelines also.
All right, point well taken. Also, let's talk about your asset quality right now. It's improved in FY23. Can this trend continue? GNP has come down from 6.7% in FY21 to 2.5% in FY23. What's the guidance here on? What kind of level can one look at?
The spike in the NPA, as I mentioned earlier, it was due to the COVID in FY21 and 22. There was higher slippages. And by and large, we have cleaned up the NPA book in FY23 itself, which is reflected in the gross and net NPA levels. If you compare the gross and net NPA levels of June 23 also, the same trend continues. And we are hopeful of continuing the same trend.
So you are looking at a level of around 2.5% also. Is that right?
I'm unable to give any futuristic guidance in this regard, but we are confident of maintaining the levels which we have shown. The resilience has already happened.
Okay, let's talk about your capital adequacy ratio in that space. It seems to have declined from 24% to 19% in FY23. What explains that, and what can be expected going forward?
So the capital adequacy came down because of the asset growth which has happened during this period, and we have not infused any capital since 2021. And with this capital infusion, again the capital adequacy will go up to the earlier level which you have mentioned, around 24%, and the growth for next 1 to 2 years can be catered by the fresh capital infusion.
All right, gentlemen, we'll leave it at that. And thank you for taking out the time and joining us, and wish you all the best for your subscription.
Thank you. Thank you very much.
Thank you.
Pleasure. Thank you. All right, with this, it's a wrap. Thank you so much for tuning in.